Is the bond purchases, the $120 billion of asset purchases, helping the labor market specifically?
Well, the labor market really, those problems are more on the supply side, not the demand side. There's plenty of demand for labor. I mean, the vacancy to unemployment ratio is almost 1 in terms of number of people looking for jobs. We don't have any problems with workers saying they can't find jobs. There's plenty of jobs. So it's not a demand side problem. And that's what monetary policy normally does. So hopefully once we get through September, some of the unemployment benefits go, if schools all reopen and don't get affected by the Delta variant, then the labor market should really take off starting in about August and September. Hopefully that'll continue on through the rest of the year.
So it sounds like, Governor Walker, you're pretty optimistic on the economy, that we're going to continue to see growth. The 10-year yield right now is down to 117. Is the bond market sniffing out something that you're not seeing?
Yeah, it could be. There's a lot of stories. I don't really know. There's a lot of things that be going on with the bond market. My suspicion is that the Delta variant is creating a bunch of uncertainty. I don't think it's going to have a big impact on the U.S. directly, but it could through our foreign trading partners. But I think within the U.S., I don't really see it having a big impact. If you remember back in December, we were looking at, the absolute peak of the COVID variant in terms of deaths, hospitalizations, everything. People were predicting a recession in the first quarter of this year, and instead the economy grew at 6.4%. So even in the worst of all worlds, the economy still went on and did extremely well. So I'm looking for the same thing to happen now, and that the Delta variant's not going to sidetrack the U.S. economy in any way.
Where do you stand on the whole issue of transitory inflation?
Yeah, I mean, my base forecast is that inflation will cool off in the latter part of the year, and that some of these increases that have occurred because of reopening will cool off and inflation will come back down. That's my base case. My concern is just anecdotal evidence I'm hearing from business contacts who are saying they're able to pass prices through. They fully intend to. They've got pricing power for the first time in a decade. Those are the sorts of issues that make you concerned that this may not be transitory. So it's really an upside risk. I don't foresee it as my base case, but I do worry about the upside risk that this becomes more than just transitory.
Where would you say you are relative to the rest of the Fed on that point? Is the committee moving toward that idea as these high inflation prints stick with us and we do see more and more companies with pricing power?
I would say that people haven't really changed their outlook. It's what I just said. They look at it more as an upside risk to inflation than what they originally forecast a few months ago. We all think it's probably going to pull off once you get to like October, November. But there is the upside risk that wage pressures from the labor market, the bottleneck problems we're seeing don't unravel as fast as we think, and that you may have this upside risk to inflation. But inflation expectations are well anchored. They don't seem to be moving, certainly in market expectations. So the market certainly believe the same story that we're telling.
Do you have concerns about the Fed being behind the curve on inflation if we were to see it more persistent, say, into 2022?
Well, given my outlook, which is very optimistic for the economy, as I said, if the jobs reports come in as I think they're going to in the next two reports, then in my view with tapering, we should go early and go fast in order to make sure we're in position to raise rates in 2022 if we have to. I'm not saying we would, but if we wanted to, we need to have some policy space by the end of the year. That may be on the more optimistic side of the committee, but that tends to be the outlook that I have.
Tapering early and fast. Can you elaborate on that, what that would look like?
Well, like I said, I would easily envision that if the numbers come in with 800,000 to 1 million jobs in the next two reports, you could taper in October. You don't have to wait till January. And fast, meaning a faster pace than we had in the last tapering episode. In that situation, the economy was, got to keep in mind, when we started tapering in 2013, unemployment was 7.5%, growth was 1.5%, GDP growth, and inflation was 1.5%. So we're in just a completely opposite situation, we've got growth over 6%, unemployment under 6%, and inflation over 3%. So there's no reason you'd want to go slow on the tapering in it to prolong this. You want to get it done and get it over with.